Ladies and gentlemen, you see that I have brought with me this wonderful one-page handout on supervisory convergence, because that's where we're going now. We're moving straight away into our first panel on this subject. With Solvency II on the books now for nearly 2 years, what is the picture when it comes to consistency of implementation? What do we mean when we talk about supervisory convergence? We see a number of elements here. Let's try to talk in more detail about what we really mean with this term and how do we foster that truly pan-European risk-based approach. What needs to be done to prevent regulatory arbitrage, to establish the famous level playing field? Those are some of the questions we want to address. May I ask the panelists to please join me here on stage? You can applaud for them right now so that we'll be able to start discussing. So Patrick, I'm going to ask Patrick here. Sarah, you there, please. Mr. Kaufman here. And you here, please, Frank. So it is my great pleasure to introduce our panelists, starting to my left with Frank Grund. He's Chief Executive Director of Insurance and Pension Fund Supervision at the German Federal Financial Supervisory Authority, the BaFin. A warm welcome to you. And seated next to him is Bernhard Kaufmann. He is Chief Risk Officer at Munich Re. Perhaps we should say, since we're talking just now about sustainability, your company, of course, was one of the very first, which in the late 70s pointed out climate change risk. So indeed, the insurance industry involved there from the very start. And Mr. Kaufmann previously served in the same position and as head of integrated risk management for the Ergo Versicherungsgruppe. And then seated next to him, it's a very great pleasure to welcome Sarah Goddard. She is Secretary General of the Association of Mutual Insurers and Insurance Cooperatives in Europe. She was formerly CEO of DIMA, Dublin International Insurance and Management Association, and she co-chairs the Dublin City of London Capital Markets Union Task Force. So great to have you with us as well. And finally, it's a pleasure to welcome, representing our host, Patrick Hoetjes. He's Head of Oversight and Supervisory Convergence at EIOPA, and he previously headed the Dutch Central Bank's Unit for Supervision Statistics. So great to have all of you with us. Our panel is entitled Supervisory Convergence, Looking Back to Look Ahead. And I want to begin by asking the audience to do just that. We have a digital question for you, and it addresses your impression of how we're doing on supervisory convergence so far. Here's the question. How would you, could we get that on screen? Thank you. How would you rate the current level of supervisory convergence in Europe? High, medium, low, very low, or none at all? Please vote now. Oh, yes, please. Either one, doesn't matter. Thank you. So you have a nice long time to think about this, 10 more seconds, and then we will, I hope, get a bar chart. Okay, so that's not too bad. The glass is half full, according to 49% of you, or more than half full. Yeah. And 52, 38, 48, yeah, 52 say low to none. Okay, let me get a very brief response from the panel. I'm just going to go straight down the panel and ask for your take on what you see here. Frank.
I think it's a clear message that all of us did a good job during the last 22 months, because we started 22 months ago, and having now a half full glass, I think it's a lot.
Thank you. Bernhard?
Absolutely share this view. We are on the way, and I think that's very, very reflected.
Sarah Goddard, how would you have voted?
I think that probably I would have been going with the majority on the medium. We're getting there. Sometimes I think we have to be clear as to where we're getting, and it's what the whole concept of supervisory convergence actually should be and is, but we're on our way.
Very good, thank you. And Patrick?
Yes, no, I think it's very encouraging, the message. Of course, as a supervisor, I'm more inclined to the half empty. So it's encouraging to see these messages.
Thank you very much. So let us now delve deeper into the question of where we stand. And Bernhard Kaufmann, even though you say the glass is half full, let me ask you, as a global player doing business throughout Europe, what do you see as the main obstacles to achieving better prudential supervisory convergence?
I like very much in your question the better and not more, because after now 2 years in Solvency II, after now also massive investments from our side, from the industry, we see that Solvency II is biting. It's really showing that it means something. And also, I think the expectation is that, or what we were expecting from Solvency II was, of course, to have one European regulatory framework that will reduce frictional costs for us also as a global player, at least in Europe. Even so, of course, there are other parts of the world which have different regulatory regimes still that we have to deal with. But the hope, of course, was that in Europe it will converge very, very soon and very, very fast. Now, that's why I think the glass is half full, because now we see where the obstacles are and that there are still obstacles. But I would highlight as the most important obstacle still the political obstacles in the way of Europe is not one country. Yeah. Well, it's very clear that where we see main issues coming from, this goes back to the fact that we have different legislations, we have also different tax regimes, for example, in different countries. That means the treatment of deferred tax assets in Solvency II cannot be consistent in Europe. So these are the kind of issues that we see now coming up. And then, of course, I think what Gabriel pointed to, the supervisory culture in Europe, that's, I think, the second point, how things are interpreted. So I would be really grateful if in the future I would not have to talk to a national supervisor about applying for or using certain measures, and the answer then is no, yeah, that may be written in the law, but this does not apply for you.
Okay, thank you very much, and we will return to some of those issues in just a moment. Sarah Goddard, you represent the relatively small insurers in Europe with limited or no cross-border business, but the competitors are often cross-border actors. So many people might assume, because you were saying, you know, we have to ask what is convergence, many people might assume that a level playing field would be a central aspect of what you would want to see emerging from convergence, a crucial priority, especially vis-a-vis those bigger cross-border insurers. How do you see it? Is that, in fact, a central aspect of what you would say is part of the what?
Well, I think, first of all, we should sort of like go back and have just a very quick look at what the mutual and cooperative insurance sector is, because in fact we run from the very, very, very small and very detailed to actually those that do pan-European business. So we actually have a big range of players. Some of them are involved in, for example, ICS programs. So that gives us, I suspect, a pretty detailed insight as to what is more appropriate for the whole range of industry, and then that which works at very, very, very specific level as well. And I think that the overall message is that the supervisory regime needs to understand the local culture, because the local culture is that which is determined by the policyholder. So for some, what you don't want to see is that there is a convergence to a one-size-fits-all. Yes. We are the big advocates of proportionality and getting that mix between proportionality, and we were very glad to see some of the changes that we've seen with the simplifications, for example, that have come through EIOPA recently, and particularly for credit rating agencies, which we saw as being something that was particularly disproportionate in its application. So we're grateful to see that those changes have gone forward. But we still need to see where harmonization and proportionality and gold plating don't all start acting against each other, both at that very specific level and at the cross-border level.
Thank you very much. And picking up on that, Van Grond, EIOPA has a mandate to enhance European supervisory convergence. Perhaps if the EU Commission has its way, that mandate will even be strengthened. Whereas such a mandate is hardly mentioned in any national legislation for national supervisory authorities. Is that a problem?
It's a strange question, a funny question. Because I think, what are we doing since 1st of January 2016? We are working together, we are sitting in EIOPA, we are part of EIOPA. All the national authorities are really striving for convergence. I think we are a very important part of EIOPA, and I think there is no distinction. And in our German legal framework, there's a clear task for BaFin to cooperate on an international level with EIOPA, with the NCAs, and I think so far we are legally obliged to follow guidelines or to take into account recommendations and guidelines. So I think that is not really a problem for me. For me, the problem is that we expect too much, as you said. I think we have a different labor law, social law, contract law, tax law, and to expect from a supervisory regime that we will have convergence in every aspect for every product within a minute, I think that is overambitious. We have to go a further path, but we are on a very good way, as we saw here in the bars.
So let me now throw that ball right on to Patrick Hutjes. We've heard on a very good way. How would you assess the movement along that path? Would you say that when you look at what has been achieved in the past 22 months, that in fact you are satisfied with how national supervisors are working their way along the path?
Satisfied is always a difficult word for me to say, to be honest, because indeed, what I mentioned earlier, that the glass is half full. As a supervisor, you always see where the risks are, where it can improve, where you need to improve. So I still see a lot of room for improvement on supervisory convergence, and still a lot of work for us to do. But if I look indeed at the board and also at the decisions that have been taken the last 2 years, after, you could say, the application of Solvency II, there's a lot of encouraging steps that have been taken, and I think the common supervisory culture is a very clear and very good example of that. We all recognize that having the rules in place simply doesn't suffice. You need to do more, and I think the community as a whole is convinced of us needing to do more. So I'm reasonably happy with the progress.
Let me go to the audience with another question about the obstacles, and then come back and ask all of you to reflect on how the audience sees it. So our second question to you, ladies and gentlemen, is this. What you see as the biggest challenges to establishing supervisory convergence. And we've heard mention of several of these already in this opening round of statements from our panelists. The first choice, could we have that second digital question on the screens, please? No, we can't? Okay. There we go. What are the biggest challenges to establish supervisory convergence? First answer, lack of independence of supervisory authorities. Second, one-size-fits-all approach. We've already heard that mentioned here from a European perspective. Number 3, lack of willingness to cooperate between national supervisory authorities. We've heard at least here from BaFin, that's certainly not the case. And number 4, lobbying efforts to maintain the status quo or to weaken supervisory tools. And finally, other. So let me ask you to please vote now. You have a nice long time to think about this, I see. Oh, no, you don't. But perhaps they keep it up while you're still voting? I guess not. I don't see the numbers changing. So those who have voted, I guess, one-size-fits-all approach from a European perspective. Very interesting. hands down the strongest share. Patrick Hudjes, do you have a reaction when you see that?
Yeah, I'm very surprised to see that, obviously. But it's good feedback. Now, the surprise is that because the way the system is built, I think the system is clearly built that day-to-day supervision is being performed at the national level. And that's for a good reason, indeed, because there is the knowledge and understanding of the market there. So I think the way that the system has been set up in insurance clearly is not fitting to say this answer. And I think us at EIOPA, we do recognize that. And I think this is also what is reflected in this common supervisory culture. It's about approach to supervision that needs to be risk-based. But it's not saying we're ticking the box on how you apply the rules. I think that's clearly not the way that we approach supervision at EIOPA.
Franco, and I would also be very interested in your take. Sitting there in that family of different national supervisory authorities, you've certainly expressed BaFin's great interest in cooperating. Are there some family members who perhaps would like to either see weaker supervisory tools, who are perhaps subject to influence by lobbies, and or do you sense a pressure for a one-size-fits-all approach?
I would like the other.
Okay, please tell us. Other.
Number 5 would have been my answer. But perhaps the one-size-fits-all question, I think we must be careful that there is no misunderstanding. We are not talking about size of a company. Our regime is related to the size of risks. And sometimes I think that is, and that I wanted to say to your remark, sometimes it puzzles me a little bit. I'm a small company, and then that is not proportionate. That we hear very often. I think that's wrong. The regime is related to the size of the risks, and small risks, small regulatory supervisory necessities, and vice versa. Insofar, I think that sometimes is a little bit misleading, and for the willingness, I think I made my point, my first remark.
What would be an other for you?
I think the simple fact that we are in a very complex and heterogeneous world. And that's my first point I made. You cannot expect, that's overambitious. To have in 22 months ideal convergent world. That is too much. And insofar, I think I'm very much with the other.
Okay, thank you very much. Sarah Goddard, a word perhaps about the response, but also to what you've just heard from Frank.
First of all, I think the size element, the fundamentals of proportionality are very simple: nature, scale, and complexity. So saying that you're small, I agree, is not sufficient to say, therefore, in that sort of environment, you should have a lower level of regulation automatically.
Yes.
But there's still, I think we've got a long way to go before we actually get to a properly developed proportional environment.
I agree with that.
So, I think we've got to be careful not to be
agree.
oversimplistic, and yet at the same time, I would like the regulatory system to become more simplified anyway, and more transparent, because at the moment, we've been talking about Solvency II, which was originally, a high-level principles-based thing, which is now, has destroyed several forests as we've all been going through the various iterations. And I'm glad to see that we're actually at the stage where maybe we're beginning to get through into a more appropriate environment. So just to make that comment. I suppose one of the things that got me was the answer to number 4, in particular, the lobbying efforts to maintain status quo or weaken supervisory tools, because of course Amice does get involved. We like to call it advocacy. We're not for profit. Other people would call it lobbying. So, whatever you want to call it. We've been very involved, for example, in the recent ESA's review. And that could be seen that we want to maintain the status quo or we want to weaken the tools. But in fact, what our view very much is that we want to see the tools that are there being properly applied. There are good tools which aren't being used at the moment at EIOPA. And the common message across industry is that we all want good supervision. We want intelligent and appropriate supervision. And that, again, you know, coming back to the convergence and the idea of the one size fits all is not intelligent. It's taking a common baseline, which will mean that either it is anti-competitive to some organizations, or could, in the worst case scenario, actually encourage a race to the bottom, which is in nobody's interest.
Thank you very much. Bernhard Kaufmann, I want to hear your reaction as well, but may I combine it with a question or two that relates to the same theme? And that would be what EIOPA itself can do to better achieve convergence in both prudential and conduct supervision, and whether in dealing with the members of the family, those national supervisors, you would want to see EIOPA more clearly express its own expectations as to convergence.
Mm-hmm. Again, I like better in your questions very much and not more. First, I would also have voted for other, because as I mentioned before, beside the simply European countries being different and also having their specialities, what we encounter, or what we see mainly, are really local supervisors acting for whatever reason in a way where we are getting into discussions which is more about interpretation, perhaps also a political agenda that is behind certain actions. This is what the kind of problems that we are facing. So this nearly 50% for this one-size-fits-all problem reminds me a little bit of the time we implemented our risk-based capital regime or our value-based management. So we started in, I think, 2000. And if you have asked the same questions to our colleagues in the business, after 2 years, you would have get the same reaction. Yes, generally it's a good concept, but I'm different. No, I'm special. And it takes a time. And after 4 or 5 years, this is sorted out. No? So for me, this is also somehow understandable. Now to the question, what can EIOPA do? I think EIOPA clearly has its role and has its tasks in the overarching questions like stress test, pulling together analysis of what is happening in the different markets, LTG and so on, and also what Gabriel was referring to be some sort of fire brigade if there really are topics coming up. Now, can EIOPA, from my perspective, be the driver of achieving convergence? Difficult, because I would say, to my business colleagues, I would say you are too far away from your clients. So because it's an indirect interaction. And so for me, it is always about trying to get the topics, and I think they are best or mostly raised, identified by the national supervisors, taking those up who are really relevant in a European context and then acting on them. And I think this, we already see it, that EIOPA is starting to do this, but I think that is the main point, and I think that's also very nicely linked to this supervisory culture, because you only create culture if you're interacting with each other, and also take everyone along. And I think taking also the national supervisors along in these analysis, in these firefighting exercises, I think that's the way forward.
Let me ask our other two non-EIOPA panelists as well to please comment on how they see EIOPA's role in interacting with national supervisors who perhaps aren't entirely following what you might call expectations or guidance. Sarah, how would you see the role in terms of conduct supervision for EIOPA?
Well, I think that I suppose, again, I hate to say this, I'm sounding really contentious here, I'm not meaning to, but I would slightly disagree with you. And maybe it's because of the very structure of the mutuals you were saying about being separated from your customers, whereas we have a different sort of structure. So the customers are also the owners, and we end up in that sort of relationship. So that means that in those contexts that the carriers better understand their customers, which tends to be, again, very much at the local level. And there are, we're all part of a European family which has got 27/28 and about to become one of the ex-28, but I'm becoming one of the 27s at the same time. We've all got our different ways of doing things, and I understand the challenges that come from a pan-European perspective, but then at local perspective, things like conduct of business are ones that need to be understood at that level. I mean, EIOPA's role very much to me is being at the top level, providing the structure, being the principles-based environment. And then when it comes to how there are commonalities of how things are applied, being able to make sure that, we'll come back to this thing of we don't go down to the lowest level, but there are standards of policyholder protection which can actually reflect local culture, but then are brought in such a way that those goals are actually achieved.
Frank, would you also have recommendations toward EIOPA about the most productive forms of interaction with national supervisors in terms of trying to get to that better convergence that we're talking about?
I think to name elephants in the room. For example, you had an elephant in the room that was the internal model. I heard, I understood. And I think, are we really treating internal models equally in every country in the EU? And that is obviously not the case, and that's what you're mentioning. That's, for me, a very good example where EIOPA in the recent framework has really the possibility to raise issues, to lay things on the table, to facilitate and to challenge national supervisors. They are challenging, I can tell you. They come to us and ask nasty questions, and that is, I think, very good. And that is the way how they can contribute more and more to convergence. And even so nasty questions about internal models in specific countries that could be raised even more by EIOPA, and I would encourage them to do so.
Patrick Richards, do you want to speak particularly to that before I put an additional question to you about EIOPA's tools in general for driving convergence?
Now, I'm very happy with Frank's words. Now, I wanted to address comments from Kaufmann and Godard. So it's more, you mentioned that it's difficult for us to be the driver of supervisory convergence. And I think this, you exactly put, you could say, the point where it bites. I think for us to make Solvency II a success, we need to engage with the national supervisory authority. We need to have our feet in the dirt, you could say. We need to be out there. We can't do it from a tower in Frankfurt. This I think we understood very early onwards. So I think the way that we have set up our oversight and our supervisory convergence team was from early on days going out there, meeting the national authorities. And this is also a process. What Frank is mentioning as challenging and even being more challenging, you can't be up there challenging from day one. You need to build up this relationship, you need to build up the trust, but you also, and I think this is what I wanted to address to your comments, you need to understand the local specificities. If I want to be relevant, if I'm across the table to Frank and I want to be relevant, I want to be credible towards him, I need to understand how specifically products work in Germany, in the German market. Because if I take a one-size-fits-all approach and just give general comments, there's no value added there. So it's very clear for us that we need to be engaged. We need to engage with, of course, our first level is the national authorities, but we also need to go deeper. We need to understand the local markets, and also for that, engagement with market players is, of course, a very relevant and valuable source of information for us to be of better value to the supervisory system as a whole.
Can I ask you about one particular tool or process, and that would be supervisory colleges. EIOPA is, of course, part of supervisory colleges. Would you say that they are a meaningful way of boosting convergence, or would many of your colleagues see them largely as perhaps just an administrative obligation you have to fulfill?
Here also I would agree with what we are at Supervisory Convergence. We're on a good way, but we're not there yet, clearly. I think in many colleges you see it's an administrative body. So we're not discussing the real issues. We're not engaging with industry in the way that we should engage as supervisory community. And there's clearly a role for EIOPA, but also obviously for the national supervisory authorities to improve the functioning of the college. So I think we have set up a system that colleges are in place. We have the tools and the room to do good work, but we're not there yet.
Yeah. But I think there are good examples and
yeah.
bad examples, and we should concentrate on the good ones and be encouraged by the good examples. And for example, the model of colleges we have on the ICS as well, and there we will have even a more important role with the new ICS agreement we have now, as Gabriel mentioned. I think we should really expect from each other, and I expect that from EIOPA, that they are playing an active, knowledgeable role in the colleges. And if that has been done, and we have good examples, yeah. That should encourage us, and we should not accept it if it's only an administrative burden. Yeah, that's a waste of time, energy for the companies as well. But a good, organized, challenging college is very good for all participants, I think. And we should strive for that.
Could I just interject there, because I think also it's important to learn from the bad examples. If we look at the title that we're doing, you know, Convergence, looking back to look forwards. We need to make sure that we don't replicate the problems of the past, and at the same time ensure that we don't try to overcorrect. And we've seen a series of situations where there's essentially been an overcorrection. So this comes back to, you know, my central tenet of we've got to be proportional in every response. We've got to learn from the bad as well as the good.
Thank you very much. We're coming closer to discussion of that $64 million question, what exactly is convergence? And I'd like to, and of course here on this sheet we have a wonderful look at different aspects that we could take into consideration. Actors, we could look at characteristics. There are a number of different measures. So I'd like to ask the audience, looking toward the future, get our third question up here on the screen. There we go. What is a common supervisory culture? Which of these three statements would you agree with most? So choosing one doesn't mean excluding the others, but which would you say is the priority when we talk about what do we mean by common supervisory culture? Number one, laws and regulations are interpreted in the same way across Europe. Number two, common understanding of the way supervisors think, behave, and work within their community. And number three, policyholders and beneficiaries are protected wherever they are based in Europe, so results-based, essentially. And number four, this gives you the easy way out, yes. All of the above. So please vote now. We should have maybe had none of the above as well. Always a challenge if you put the catch-all in there. People keeping their options open. But number two got a fair share as well. 26% common understanding of the way supervisors think, behave, and work within their community. So that's very much that local perspective that Sarah Goddard also mentioned. Frank Grund, please, you have a comment.
I think if I look at this, and I think the second idea was very much a driver for our paper we wrote. Mm-hmm. It's about the culture, how we do not talk about conformity. We are not have to be, it's not a conformity in each and every detail. The idea is the way, the common understanding, the culture. Mm-hmm. And insofar I have a lot of sympathy for number two, and number one is simply not possible because we have different laws mm-hmm. and even different regulations, so that is not a valid answer. And three, that's a no-brainer, I think. They should be protected. Yeah? So, but I think the main issue is the culture. And so far I have a lot of sympathy for number two.
So with all respect for the culture, when if we dig a bit deeper on what that means, And we are working toward something called convergence. Would you say that means, with all due appreciation for cultural differences, that we nonetheless are aiming for some kind of averages, or are we trying to get some recognition for best-in-class examples that can be used as aspirational goals? Or where are we heading then?
I think neither nor. I would say let's strive for convergence in real relevant matters, where it's really relevant for the customer. And it's obvious that all of us would like to raise the bar. That's clear. But and I'm not striving for average. I think that's not the right answer. Best in class. Not everybody can be best in class. We have, as a national authority, we have our own game. We would like to be best in class. There we have. And I know a lot of our colleagues are doing the same, but it's very difficult always being the best in class, as we know from ours, at least for me, from my school days.
It doesn't always make you the most popular, does it?
No, that's not an issue. I think the culture is really the way to go forward to understand it.
Let me then dig deeper on what we mean when we talk about culture. Sarah Goddard, what from your perspective would be the key elements of good supervision in terms of that culture?
Well, I think I've probably covered them to a certain extent already in some of the comments I've made. It was excellent to get these two publications today, and my long past background has led me to do a quick skim read of the booklet, and certain things sort of come to mind immediately. Again, I think that we've got to recognize the differences as well as the similarities, and be able to get a standard across those differences rather than try to go towards, for example, commonality of thinking. That's something that, I mean, Frank, you mentioned about the laws and regulations. I mean, my reaction to that is that they are different. The underlying laws and the underlying legal environments are different in each country, so we cannot look at there being a culture that's across those. Thinking, if we go back 10 years, one of the big challenges really was, I think, with a certain number of boards, was about groupthink. So we can't look at having supervisory thinking being common, because again, it might be replicating some of the challenges that we've set up in the past. So the culture itself is one that is more intelligent. It's more intelligent from the supervisory process, but then that comes back down to, we need the national supervisory authorities to really be the people who are the embodiment of the local supervision, because they really understand what is going on within that cultural environment.
Werner Kaufmann, your response, perhaps first of all to the audience take there.
Yeah. Perhaps I try to oversketch it a little bit. Seeing the result is disappointing, because we mainly were big supporter of Solvency II, mainly because of the principles-based approach, because these are the same principles that we share in steering our business, and which is also fitting very perfectly our business model. We paid a lot of money, 500 million euros, to prepare for Solvency II. These were our investments. And now seeing that the first point, which is most crucial in really having this ticket into this club of hopefully 28 very, very similar countries having the same regulatory regime, only seeing 18% is disappointing, because that for us, of course, is the main issue behind this, the main benefit that we get out of this. I would have not interpreted in the way you did, in the strict way, so I would have been a little bit more pragmatic and saying, okay, if now and then there is a little bit of different interpretation. But therefore, with some pragmatism that we learned, and also, of course, we cannot gain all the capital efficiency that could be harvested within the European zone and so on. Yes, we can live with this, But of course, this is for us the main purpose.
Patrick Hudjes, your reaction to the audience poll and also what you've heard here so far?
Yeah, just on the poll, I think the answer number 3, so the policyholders, this is of course the center of everything. I think the center of everything that we're doing. It's about creating the conditions that the policyholder in Europe can rely on having the same level of protection throughout the internal market. That's what lies behind all of our work. And what we believe is indeed the key element to reach that same level of protection is indeed to look at how do the supervisors interact with the market, because we also need to be risk-based. And I think maybe to add something that Frank mentioned about best in class, we can't be best in class on every topic. It's simply also a matter of resources and priorities. And a good supervisor prioritizes the risk in its markets and focuses its energy on those elements that are key to address the most urgent risks in the market. And we want to facilitate that. And that, I think, is what is also underlying a common European supervisory culture. It's a risk-based culture. So it's not a tick the box. It's not do we check all the rules and the regulations are in place and being applied exactly as the regulator had intended it from its, you could say, ivory tower in Frankfurt. No, it's really to look into the field. What matters most? Where do we need to address our resources to?
Frank Grund, let's say that BaFin might be seen by some as best in class. Nonetheless, no doubt it won't be the case that all other EU member countries simply take over the BaFin approach in the course of convergence. So what would be, in fact, your priorities as you look toward greater convergence?
First of all, I think we need a lot of trust between the supervisors. I think that trust has to grow, but is growing, and I really see that we're in a good way. And that means that every supervisor brings in to the discussion his issues, his priorities, and we have, I think, we are improving there. That's happening more and more and more, that some countries, some supervisors bring up their points. For example, I would say, first of all, how can we do it? And I think that would be on my priority list, that we still have some room for improvement for dealing with the lot of data we get. Are we really harmonized there? What are we doing with the data? Do we use it in an efficient way? So that is for me a priority, the how and the what. I would say there are a lot of technicalities in Solvency II where we have still to work on the loss absorbing capacity of deferred taxes, for example, or how we do we deal with the remuneration of board members. Yeah, that we have an opinion published in the German market, and then some groups say, okay, that is not so helpful in my subsidiaries or in other markets. There we, for example, want more convergence, better understanding. And I think there are simple questions or simple issues, but there are a lot of them. And Brexit, when Gabriel mentioned, that was exactly the same issue when we had the first applications for companies who came to all of us. There was no convergence because that was a new question, and I gave my answer, and the colleague in another country gave his answer. So, and then we brought it to the EIOPA table, and I'm happy that we now have a common answer. As Gabriel mentioned, I think that is exactly the way to come to more convergence, but that needs time and trust between all of us, and trust of the market and of the lawmakers to the supervisors.
Mm-hmm. And an evolution based on
yes.
actual developments.
Yeah.
Let me just ask Patrick Hudjes to perhaps briefly comment on what Frank has just said about the need for data, essentially evidence-based convergence. What role does that play in your thinking?
The data can be a source of prioritization. So with other words, it can be an early indicator. So you could detect issues, for instance, cross-border issues. Where are certain lines of business coming from? How are they? So it's for us a tool to see where we can detect much earlier onwards possible issues, possible risks in the market.
it's one of the tools, I would say. And I would agree with Frank, there is a lot of work that we can still do there to further improve, to fine-tune it. Also to really use it as big data. I think that is also still unknown territory for us. So what kind of information can we get, not out of what the data point exactly means, but the totality of the data points, how does it move, what does it tell us? I think there we are on unknown territory. So there's a lot that we can still do. But first and foremost, it's like being in a dark room, it shines a little bit of a light where the risks are, where we need to focus, which direction we need to go into.
Thank you very much. And perhaps also second aspect related to Brexit, also though beyond it, you earlier this year started with supervisory cooperation platforms for insurers that are materially using EU passporting. How do you see EIOPA's role and contribution in using this tool, what you've achieved so far and where it's going in future?
I think this really lines up a lot with what Frank said about building trust. This is really a very specific case where companies that have imminent risks or even are in difficulties, where we bring all the supervisory authorities involved in where this company is operating, where it's active, and share information and share concerns. And it's obvious that the concerns are not always aligned between home supervisors and host supervisors, where the priorities might lie from each of its perspectives. So you really need someone that coordinates, you could say, all of the people around the table, and to make sure that we move forward as a group in one direction, that we communicate to this firm as one supervisory community. And this asks for us a lot of coordination activities, a lot of bilateral contacts with all the supervisors involved. But the results are indeed very promising, as what Gabriel mentioned, because what we do see is that one of the key elements of these 5 key elements of common supervisory culture, which is the conclusiveness, so to reach a point where the supervisor has information. It's never perfect, it's never complete, but you have to act. You have to act on what information you have. And I think the platforms have shown that it really, how can you say it? It provides us all with an additional tool to act much quicker and to act much more decisively to protect the interests of the policyholder.
Thank you very much. One last, perhaps, case example before we go to audience questions, and it relates to, I think, a point that also Frank brought up a bit earlier, question to Bernhard in regard to the approval process for internal models. What changes you would expect if, in fact, EIOPA does get more power in that area?
In the 2 questions before, I like better. Now it's more. I don't like more.
Okay, let me see. Let me rephrase.
So, I think the way that we went over the last 10 years, and exactly 10 years ago, the pre-application phase together with BaFin started, has brought us where we are today, meaning a very deep understanding from BaFin's side about our internal models, but also not the technical aspects of the internal model, but especially also how it's embedded, how it's working, what are also how it's really linked into the business and to the company. And it has been a huge effort from your side, but also from us, and having also now seeing that it's again referring to biting in the way, it's not about raising formal issues, it's about really content. It's about discussing where there are weaknesses, and BaFin is spotting these weaknesses. So we do not feel under-supervised, to put it friendly. Now, assuming that EIOPA would also look into this and would also have to come to an understanding that you are also able to really make a difference or to really contribute, would be a huge effort. And so I think doubling this kind of effort for us would make no sense. We have a group supervisor, we have a lead supervisor. For specific questions that are then more referring into the European context, also how does it link into perhaps other groups, other issues in other countries. Perfect sense, makes perfect sense. But I would really see no more or no need for more from an EIOPA side.
Please, Frank.
I think that's exactly the reason why EIOPA is part of every college with the internal models, to be able to facilitate exchange of views. And so I think that is exactly the reason why, and we are intensifying the exchange of data. We did so this year, and so far that is important. But I would strongly recommend to leave it with the structure, because there is a clear link between the day-to-day supervision and the approval process of internal models, or the decision-making process of internal models, and you cannot separate between making some decisions and the day-to-day supervision. If one would like to do so, then we would have to discuss very different questions.
Absolutely, very different setup.
Yeah, it's a very different setup of the supervisory structure in Europe. And that is not foreseen, so insofar I think it's, we should leave it as it is.
Patrick?
Yeah, I think what you notice here is that there is a lot of investment that has been put into getting the cooperation, and of course I can fully understand that if you have done such an investment, that you're not eager to redo it again or to throw it overboard and to start again. So full understanding of the points that are being made. Having said that, we see clear difference across the internal market, and it's simply these need to be addressed. So for us, it's very clear that on internal markets we're not there yet. What EIOPA can do there needs to be enhanced. It's clear for us. It doesn't go to the level that you say, Frank, on the day-to-day supervision. We agree with that, because we will not be the ones that finally will approve the internal model. If you go to that step, yes, I would agree. That is so closely linked to day-to-day supervision, you can't make the distinction anymore. But I think what is in the proposals now is to enhance the role of EIOPA into giving advice, giving a recommendation to the National Supervisory Authority on the internal models. And that's, I think, a big step forward that we need to make, because we simply see too many divergences already from the very small period that we're observing now. And the expectation also, when you look at the banking experience, is that these divergences will not converge, but are much more likely to diverge. So we need to act.
Thank you very much. Let me now go to the audience and see if you have questions. We have people in the audience with microphones. I've got one up here in the second row. Dear microphone carriers, where could I have a microphone here in the second row, please? Do share with us, if you don't mind, who you are.
I will, thank you. I'm Catherine Morgan from the Gibraltar Financial Services Commission. My question was about question 2, which was about the things that might prevent the supervisory convergence. So we were the we were the pilot jurisdiction for the passporting platform that Gabrielle mentioned, and as Patrick has mentioned, we found that incredibly useful, and it has indeed enabled us to take quicker supervisory action. So thank you to EIOPA for that. My question for the panel is, in terms of question 2, do you think that if we split the responses into responses from supervised, this is not me, sorry, I really don't think it's me. If we split the responses into responses from supervisors and responses from industry, would there be a different spread of results in what might be stopping supervisory convergence? Thank you.
So that was the question about obstacles. Let me ask one person from industry and one person from the supervisory, so that we don't, because I'd like to get other questions in there as well. So Sarah, do you have thoughts about that? Would there be different responses depending which side of the aisle you're on?
Well, absolutely. I think it's inevitable, and it's actually, I wanted to let you know that you're not alone. The standard formula, people don't feel like they're being under-regulated either. So we're all in this together on that front. So yeah, absolutely. We have different. We're trying to come to a very similar end, but from very different ends of the spectrum. So we would have very different results, I suspect.
Frank?
To be honest, I didn't really understand the question. Number 2 was the question.
Number 2 was the question about impediments and what people see as the central impediments. And I can maybe.
I said other, huh? Yeah,
Yes.
Yes. I stick with other.
Patrick, do you have thoughts on the
No,
question?
it's clear because I think both Frank and me didn't recognize the majority of the answers. That was one size fits all. So I think from a supervisory perspective, we don't recognize that answer.
Thank you very much. Who else in the audience? Here I have, okay, 2 over on this side and then 1 here. So maybe we'll bundle, first of all, the 2 on that side. Let's take 2 questions. Go ahead, please.
Kai van Hulle, International Center for Insurance Regulation in Frankfurt.
Wow.
I wanted to expand a little bit on the other. One thing that I haven't heard the panel talk about is the cooperation between national supervisors. Because it's always seen as EIOPA to a national supervisor. But what about the possibility for supervisors to share resources, to cooperate, to delegate tasks to each other? And that would be a more efficient way of using supervisory resources.
Thank you very much. Let's just go ahead and take an answer to that. Frank?
Yeah, I think that is happening all the day, Carol, as you perfectly know, that we are cooperating. For example, the countries about internal models, they are cooperating very intensively and trying to come to good answers to some questions. I would be a little bit skeptical to distribute resources for real specific supervisory tasks just due to legal restrictions there. But I think cooperation, and I tried to mention that in my first answer, that we are obliged to cooperate with EIOPA and other NCAs, and we are trying to do so.
Bernhard, do you feel the fruits of that in your interactions?
We experienced that also in the phase of the internal model approval, that there were multinational teams looking into our model. Now on a day-to-day supervision, it's of course BaFin that is mainly dealing with our issues, again more on the group relevant issues. Then there are these side discussions that we have, which I also was referring to, that sometimes perhaps are not, from our point of view, not so necessary. But again, this is more than a very specific point coming from the market or local interpretation. And yes, perhaps that is then also would also then be more our role to escalate this and bring this to your attention, because in most cases we try to deal with this on our own. But as I hear, there is a clear openness to also address this. And yeah.
Thank you very much. Where is the microphone now? Do you have it yet? No. Go ahead, please.
Alan Morgan-Moody, the Association of International Life Offices. For those who don't know, my members only transact cross-border business in Europe or globally. Surely it's the objective, the ultimate objective of the Commission for a financial single market in financial services for the whole 27 member states. So Frank's comment that the laws and regulations must be different, surely they must be totally and completely harmonized throughout all the member states for such a market to ever come into being. And surely it must be the job of national supervisory authorities to make themselves redundant. That's my first point. But the second point is surely the real elephant in the room here preventing a single market is general good. You have all these member states producing these general good provisions which make so many obstacles and barriers to cross-border business that it's never going to succeed. So what are the EIOPA going to do about general good?
Thank you. So I'll start with Patrick, then come to Frank. We had a question over here on the right-hand side as well. If you'd raise your hand, you can get the mic already. Right, great, thank you. So go ahead, Patrick, please.
I wouldn't say I have a little bit of difficulties with the question, but maybe just to focus on the statement that was made about the NCAs focusing themselves on making themselves irrelevant. I think this is a gross underestimation of what Europe stands for. I think it's very clear to me that whatever the future lays ahead of us and however close you could say the union is going to become, we will always be a union of very different countries working very closely together. And I think the model where you have national supervisory authorities under the umbrella of a European supervisory authority is, I think, a model that is perfectly fit also for the future. However much closer we are going to work together, and the idea that there will be one Europe with one culture, one way of working, I think that's not the way I would like to see it develop, and I think the majority of people in Europe don't like to see it develop. The internal market is a very good thing. We need to work very hard on the most, you could say, burning issues, and there's a lot still to do, but we should not mix working on the internal market with that vision, you would say, of Europe.
Frank, planned self-obsolescence is generally something people aren't that good at anyway, but would it be a good goal for the NCAs?
I understand the example with the lake and the frog. You know that? Okay. But I think that is not the issue. I think we are a supervisor. We are no regulators. We don't make the law. We don't make the regulation. And as long as there is national regulation for a lot of aspects, I think it's our job to make sure that that is proceeded with. And if there is in future time a harmonized, ideal European world for everything, then it's fine. Then obviously the supervisory structure has to be changed. I wouldn't have a problem with that. But insofar, let's deal with the situation like we have it today, and that I try to describe. We are in a fragmented way, but we have a harmonized supervisory regime. But anything else is fragmented, different markets, different products, different sales organization, whatever, different culture, and I think there's still a long way, and Solvency II cannot change this world alone. But we try a little bit and try to improve it step by step.
Thank you. I had a question. Do we have a question here? Yeah, please.
Hello. Can you hear me?
Yeah.
So I'm Javor Tanasov. I'm representing the industry. I'm quite in agreement that Solvency II actually was the first step from a long journey. I think we were able to establish proper processes in the governance and risk management. However, on the one-size-fits-all, I would like to know your opinion, especially for topics like security and cybersecurity, protection of data, as well consumer protection. I think from supervisory perspective, we must make a clear statement that we cannot apply proportionality. We should not make a trade-off for security and proper protection of customer data. So I would like to know your opinion. Can we put certain topics must be implemented? It's a must. You must fit on these shoes. Thank you.
Thank you very much. Who would like to address that?
Well, I would start off by saying everything has to be from a risk-based perspective.
Yeah.
And that actually, that is, again, fundamental into proportionality, but where you make a hard edge, you actually, you're putting a challenge in. Whereas under a risk-based environment, then you are able, then you have a way of being able to respond properly to the risk, rather than saying there's a barrier, there's an above, there's a below.
Thank you, Bernhard.
Perhaps one additional remark. So cyber is a perfect example where even Europe is not big enough, because simply also where this is coming from, where the threats are coming from, how it can impact the industry, but also the differences how data issues, but also cyber security issues are treated in different countries are so different today for such a global phenomena that a local solution will never fit. No? And so how does our European approach, for example, also on data privacy, fits into the global context? Is it simply then that Europe is avoided and all the data is shifted to other countries? I think these topics are also important to take up and discuss.
Patrick, do you want to add? Or?
Yeah, just very briefly, because I think you touch a key element of proportionality. It doesn't mean doing less. It's always about the level of protection. So I think that's a key element.
Thank you very much. I have two more questions. I'd like to take them really briefly because we are close to the end of our time. So that one in the back, and then I had one here in the front, and I think that's all we will. All right, I see there was one in the middle too. Let's just make this really quick, if you would. One sentence for each question.
My name is Dreher, University of Mainz, Germany. At the outset of Solvency II, the two most prominent ideas were the principle-based regulation and the principle of proportionality. Now we see a mass of regulation, rules, guidelines, recommendations, etc. My first question is, do we end up in a rules-based regulation? And my second question is, where exactly do you see the room for applying these two principles? Thank you.
Okay, thank you very much.
You could give a very long answer for that, but I think industry was asking us for so many rules and regulation and specification what these principles would like to be interpreted. I think, Mr. Dreher, that is not right what you say. We are prepared to leave the industry on a principle-based, but that means that the industry has to make up their mind how they understand the risk, and then we will have a supervisory dialogue with that, and a lot of soft regulation was influenced or was asked for by the industry.
Thank you very much. So now the one in the middle, please.
Thank you. Very briefly, Lieve Loet, ICODA European Affairs. In the context of supervisory convergence, I didn't hear one word about the famous supervisory handbook, nor did I skim it in the little common supervisory culture booklet. So what is the interaction with this?
But we've all been holding this wonderful one sheet up in the air, so please, Patrick.
Yeah, it's the key element of the supervisory handbook. It's part of the supervisory handbook. So the supervisory handbook, of course, goes into the details on approach to each of the supervisory issues that you have. So it's an integral part of it, I would say. So it's not, they're not, yes, it's just for supervisors. Yeah.
Thank you very much. I also had a question here in this front row, if we could get the mic here. Gentleman in the blue shirt. And I'm afraid that's all we'll have time for, so please.
Thank you very much. My name is Christian Gülich. I'm from Better Finance, Brussels. And I would like to refer to the third question you had raised. What is the common supervisory culture? And the third answer, the third possible answer was policyholders and beneficiaries are protected wherever they are in Europe. And you may apologize, but for me, this, or for us, this is the most important point. And just to give you an example, 2 days ago in the German newspaper Frankfurter Allgemeine, which is a very known newspaper, I think even internationally, there was a report on possible insolvency cases in the German insurances. So my question is, what is the role of either EIOPA or the national competent authorities when the public will be informed about these possible misdevelopments?
Yeah, I'm happy to answer here. Maybe you can answer on the specific German thing, but I think in general on how, as a supervisor, there's always a dilemma, you could say, because the moment that you inform the audience that there is an issue with you more or less make it a fact. So there's no escaping anymore, it's the end. And I think what you try to do as a supervisor always is to also to look, are there possibilities that with the restructuring, with supervisory actions, this firm can continue to operate, maybe in a different shape, maybe in a different form, but your intention first and foremost is to safeguard the policyholders that are already in this company, so to keep the company running. So there's always this dilemma. There's no easy answer for a supervisor. This is our daily work, when am I pulling the plug, when am I informing the owners, and it's always too late when you have to pull the plug. And I think the supervisory platforms, the cooperation platforms, are by excellence a tool that helps us in this process, because we are much more able to get all the information much earlier, to discuss it with both the home and the host view in mind. And what I said earlier on the answer of this question, for me it would not be the answer to this question, because policyholder protection is what's driving all of our work. So the actions that we're taking all have a reflection back to the policyholder protection. That's why we are here, that's why we're doing our job.
Did you want to add anything to that, Frank Grund?
I think if there would go company bust, we wouldn't have made our job properly. And I think we have the most transparent regime you can imagine. We have this year, for the first time, for each and every company in SFCR, every customer can have a detailed look into the solvency situation of his company, so to say, where he is having the contract. I know from some companies the click rates on the websites are rather limited. The interest doesn't seem to be so high, but I think we have a very transparent system, and it's our job to make sure that nothing happens.
Thank you very, very much. And that is an absolutely great little promo for the panel that we will be having after the lunch break, when we will talk about customers' ability to interact with online information, how interested are they, and many other topics beside. But first of all, let's give this round of panelists a great warm round of applause.